Ladies and gentlemen, welcome to the Fintech Frenzy. I don't want to hear it. It is 8:30. Hopefully everyone's doing well. Let's jump into some stock market news. Now, first of all, SoFi, not SoFi, Nubank. I ended up having a great conversation with Sam Solid on YouTube. You can find it, it was live, but you can find it in the YouTube channel under the live section. What a beautiful conversation that was. It got me reinvigorated to go look back into Nubank. Obviously, I'm a shareholder of that company. I've been holding for a long time, but obviously haven't been covering it too much over the last little bit just because of a lack of news really on their part. I think that they're dealing with a lot of problems back end. Not problems, but just there's a large situation in their macroeconomic environment there in Brazil, and we covered that extensively on the live stream. But that was a lot of fun. So make sure you guys check that out. But for today, let's cover a couple pieces of news regarding SoFi, Robinhood, and other content creators, because this is getting a little bit interesting. And some retail investors are definitely getting frustrated. I'm seeing it all over, the sort of Twitter sphere, YouTube space, everywhere. So, I'm going to be playing both sides here. Do I have hair here? I sort of see it almost like, someone attacking my friend or something. It's like, I'll yell at my friend whenever I don't think that they're doing something wrong. But if someone else yells at my friend, I get a little defensive. So I'm going to play both sides of SoFi here, as I think that, some comments are a little over the line in terms of how mad people are, and then some maybe aren't going as far, or I completely agree with them. So I'll just give you guys my take on where I stand with everything. Before we get into that, though, we are going to start with some very bullish news. Okay. FDIC releases documents related to supervision of crypto-related activities. Now, for the most part, they go on to talk about what they had done previously. We can just see here, though. Today, the FDIC released 175 documents related to its supervision of banks that are engaged in or sought to engage in crypto-related activities. If we go down to the looking forward, because I don't just want to talk about what they've done previously, but what they're going to do. Looking forward, we are actively reevaluating our supervisionary approach to a supervisory approach to crypto-related activities. This includes replacing the financial institution letter and providing a pathway for institutions to engage in crypto and blockchain-related activities while still adhering to safety and soundness principles. The FDIC is also looking forward to engaging with the president's working group on digital asset markets established by the president back whenever they did that executive order. Okay, so very cool. We are one step away now. We just have the OCC. If this is a Q1 thing and Roy was totally wrong, I'm going to rub it in his face. Okay. Look at the government working quickly. Who would have believed it, eh? But yes. Now, let's go ahead and bring up some comments that are a little bit related to, not a little bit. They are directly pointing out SoFi's potential flaws here. And then I want to talk about some other things. So let's just go here for a second. The stock goat is angry, ladies and gentlemen. Kyle, he's a good guy. We talk on X a lot, and he's unhappy with the tech platform. He even brings up Palantir and Hood as, being companies that have opened themselves up to retail, which is 100% true. And SoFi not doing that at all, which is also true. But that this is somehow related to the stock performance, I disagree with. Okay, I think financials move stocks. I don't think, obviously retail money affects stocks, but it's not like SoFi isn't completely loved by retail. Up until just most recently, the last couple of days, I've been seeing a lot of comments talking about some decisions that SoFi has been making. And Kyle saying there's literally no point into anyone arguing with me. Galileo just put up 0% growth quarter over quarter. 3 years, $2 billion later, you get 0% growth. Look up the definition of zero. Okay. So, one, SoFi technology platform is not offering SoFi zero. Okay. They are continuously lowering their tech expenses. They are enabling them to offer more products quicker. They do not have to pay for that service internally. And they are still printing $100 million that is contribution profitable to the company. So let's say it remains flat. That is still going to contribute to the business over time. That is not the definition of zero. This is not a zero-sum game. But let's go ahead and talk about what I'm seeing, because I think that this is important for people, that we look at the industry in total rather than just SoFi. Because if you look at a company that is potentially going down without looking at the industry or potentially the macro environment or something, during COVID or during 2022, you could think, oh my God, all of these beautiful tech companies are piles of garbage because they're all going down. When really the entire market was going down and there was a flee away from risk on, and people were just simply moving their money away from those areas. Now, I also want to show you something very similar to that. So, okay, let's go ahead. I've got a list of 5 different companies that are also in the exact same space that Galileo is in, that are public companies. Technology platforms, core banking services. They're not all direct competitors, because some core banking services lean more towards companies that are getting into mortgages. Some, like Marqeta, don't have a banking core, but they offer what Galileo does on the card servicing side. So there's all these different competitors, but I want to show you something that goes across the board for all of them. Let's go ahead and share my screen just once more. The problem is that not a lot of these companies have actually reported yet. Only one of them has actually given a preliminary report. So it's not even that there's a lot of Q4 numbers just yet. But let's just take a look here, because I think that this is important. First up, this is Temenos. Okay, Temenos is one of the largest players, if not potentially the largest, in back-end, core banking platforms. Okay, they ended up showing on a total revenue basis for their core banking software. This is year over year, not quarter over quarter. Year over year, 7%. Okay, very similar to the 6% that Galileo just did for Q4. Now, Q3 was much better for Galileo. We can actually take a look at that over here. Galileo year over year was 14%. Okay, so Q3 was a lot more favorable because the comps year over year were much better. So the Q4 of 2023 put up a much better number. I can blow this up for you guys. Sorry. So this is the technology revenue, or technology platform revenue line. And you can see that Q3 to Q4 was a decent jump quarter over quarter, but then the last sort of 5 quarters after that were flat, barely growing at all. But the year over year comps change drastically depending on the numbers that those businesses end up putting up. Okay, let's go to Marqeta. This is where you can kind of see this across the board. Now, if you look, the growth quarter over quarter from Q2 to Q3 for Marqeta was essentially flat, but the comp for Q3 of 2023 was really low, making it look like there's an 18% jump. Well, not making it look, there's an 18% jump. We have not seen their Q4, but I would have to venture to bet that they are going to have lower quarter over quarter or year over year growth rates than 18% going into next quarter, Q4, and you're probably going to see that shrink to very low double digits. Okay, because the comps will be very hard from Q4 of 2023. What about nCino? nCino ended up growing 14% year over year. There's no 30% growth rates here, nothing crazy. Remember, this is also Q3. So this is not the latest quarter where, for example, SoFi also put up a 14% growth in Q3 year over year. Q4 is where we ended up seeing a drawback. The companies that we do have Q4 for, like I said, was Temenos, 7%. That's right in line with what Galileo is seeing. Okay. What about Q2 here? Q2 Holdings. Another tech platform, this is Q3, 13%. That was slower than what Galileo ended up seeing. Okay, $135 million. They're all roughly in the exact same range of size, by the way, as well, of what Galileo is putting up. It's not like there's some company here that does $3 billion in quarterly revenue. They're all in decent, similar sizes. And then lastly, we have Blend. This company, this is Q3, by the way, not Q4, 11%, much slower than Galileo. Quarter over quarter. We're not talking, or sorry, year over year. We're not talking quarter over quarter here. Okay. So they're all roughly in the exact same place right now. So what is that? Is this an industry that just simply cannot make any money, and that the bet on Galileo becoming the, AWS of fintech is potentially gone? Not in my opinion. If you actually take a look, this is something that Plaid's CEO ended up saying. Now, remember, these guys are the unicorns of the fintech space, right? You put them up against, or like in the names of the, like, what's the name? Stripes of the world, the Coinbases, like they are a name that most fintech investors will know. Okay, Plaid. They connect the large financial institutions together. Anyway, even they came out and said, the CEO of there, Zach, right? He came out and said, hey, it's really, really slow right now, which for them was 25%. They said, but we're just seeing a truly renewed sense of optimism going into 2025. It's way more fun to operate in fintech spring than it was to operate in fintech winter. So even he said over the last year, it's been really slow comparatively to what other people were seeing. Okay, so this is across the board. This is not a Galileo problem. This is across the board. Every, banking core, card provider, all of them are seeing slowdowns. Now, I will add, there are aspects to SoFi's growth that I dislike, that every other one is solving, by the way. If you even look at like FIS, for example, I think they had like a 3% growth rate. They might be the largest banking core provider, and I think they grew like 3%. So you're seeing this across the board. But all of those companies show unbelievable breakdowns of how to understand their growth, whether that's customer counts, okay, whether that's a total payment volume, whether that's geographical breakdowns, whether that's different cohorts of sizes of businesses. They show off tons of details, so then you can understand, including billing, by the way, just regular basic understandings of segments. Tell us what the billings are. Tell us how much you've potentially put out in terms of product that you're waiting on receiving revenue for. This is where I truly agree with a lot of people with their frustrations, because I don't mind the slowing of revenue if it's across the board. If there is a fintech winter, we'll come out of that, right? Like Zach said from Plaid, we're going into fintech spring. There's tons of optimism. They're loving the new administration. They love the openness into crypto. These are all amazing ideas for Galileo. So the idea that this is going to be something that sticks at 0% growth is not something that I'm signing up with at all. There will be a reacceleration of growth if I were to bet on it, right? I am actively betting on it by betting on SoFi. Okay. But what was I going to say on that as well? It's not like there's, zero ad while we wait for this, by the way. SoFi is transitioning their own core. They don't have to pay for that. They are doing their own payments. Tons of opportunity there. I just need to see more disclosures, and I agree with them there. I also wanted to bring up another comment from a SoFi contributor that actually does very well. The Deuce Gabuski here, who has done amazingly on breaking down some things like Ortex short volume for SoFi. All of this stuff has been very good. But he also came out and said, I believe that the AWS of fintech, saying that it's the AWS of fintech, has costed SoFi $10 billion in market cap. If you want to put a target on your back to be the next Amazon, you better produce. Production has been halted. Deuce, love you, brother. What are you talking about? This is not true in the slightest. Okay. Wall Street doesn't care what management team calls their product or says that they're going to be if they don't align, right? They're going to line it up with what they're seeing. And then if they say, hey, we're putting up 0% growth year over year, 6% growth year over year, they're going to sign a market cap to that. But they're not going to assign it based on some, arbitrary comment that management made years ago. And by the way, I still actually believe in those comments. Like I do think that over time, SoFi is going to offer broader and broader spectrums of tools for fintechs. And there's going to be a lot of players that want to, like I sat down with Robinhood employees and I said, why do you guys use Galileo? And they said, well, they have like really good tools that allow like debit transactions to essentially be at the exact same price as ACH, which is like near a penny. And not a lot of people understand how they do it. So we use them because they're freaking great and they just offer a service that's instantaneous. Like their customers understand why Galileo is so useful. That's all I care about. And there will be new fintechs that start, and those customers will end up expanding and using more Galileo services just the same way that Robinhood is doing. It's just we don't. The problem is we don't even understand how their billing works. Okay, let's go ahead and there was some other things I actually wanted to pop in on as well. For example, if we can transition here, because I wanted to make some comments on a little tech company that I've been promoting. And I was actually talking with the great and powerful Tevis and Roy Crossroads yesterday. And I was talking about investing in Google. Big fan of big tech right now. Absolutely loving that. And I said, or Roy said, one of the biggest reasons why he's not investing in Google is a woke culture or something that might be getting in the way of their growth while trying to appease their employees. And obviously, if you're looking at it from, a financial standpoint, you care more about the, finances and bringing in the best people, regardless of who those people may be, even if it's 3 or 4 or 10 men in a row, if there's not a girl in the lineup, or if it's 10 girls and not a guy, or whatever it is, that he was worried that, Google might be stamping out some of those, growth opportunities just to appease a wide spectrum of employees. Google kills diversity hiring targets. A email went out to their all their employees, and they said, hey, you know what? New administration has said that this is the way that we should be going, and we want to sort of follow in line with that. So they are going the direction of every other large tech company, essentially. Meta's sort of aligned with this. Tesla has aligned with this. And I think that it gives a good sign for Google going forward that they are actually, whether or not you think that this is a social good or anything like this is not what I'm saying. But if you're talking about shareholder value, if you want to highlight what stock returns value, this is the company that I think might actually turn this around. And in my opinion, after the earnings that we saw yesterday, all it highlighted to me that you can get an amazing company for a discount after people said that their CapEx was too high and that they were trying to win the AI race too fast. No thanks. I'm fine with everything that I saw last or in yesterday's earnings call. Expanding Google Cloud margins, still being one of the fastest cloud growers on the market, taking market share. Love it. I think cloud this quarter is expected to grow 18%. I think Google is growing 30%. Gotta have it. Not many companies have had the returns that SoFi has had over the past year, said B-Dubs. No, 100%. Okay. There's not been a lot of companies that have focused their entire business on a product that was completely taken away from them, meaning student loans for SoFi. I I have full belief that SoFi will re-accelerate the tech platform. We are coming out of a broader fintech winter. Okay. There will be signups there. I just wish they also provided one or two more slides on the tech platform alone so then we could understand the business better. Let's see here. What is the main application of AI at Google? I don't think that you could pin it down to one single product. I mean, you might say that it's Gemini. The problem with AI right now is that the application layer hasn't really been developed yet. So it's a lot of building out the actual infrastructure right now before they start making the large revenue products. But they've been doing great work at Google DeepMind to end up helping a lot of healthcare breakthroughs, a lot of video content stuff, audio stuff, image creation. And the thing is that once you start thinking a little bit down the line, okay, well, how does this help customer service? Well, a large language model that has a really good voice application might actually be able to answer the phone for them. Okay. There might actually be tools that allow for, entertainment businesses and all, like, better advertising. If Google has a toolkit for not only can you advertise with Google, but will actually help create those advertisements on the other end. Like you can go down 100% of the way with AI to say, okay, well, what application can it address? The word is close to everything. So, yeah, it's just about the companies that will have that good infrastructure down the road. Um, 2025 SoFi prediction. Noto will have a sit-down interview with Tanner. I mean, so this is the thing, right? Let's go to that, because this is another conversation that I wanted to have. I have never been in favor of 100%ing your portfolio on SoFi. I had been talking about SoFi and Robinhood and Nubank and Shift4 and PayPal and all these other businesses and saying, okay, SoFi, one, by the way, no one is giving enough credit to the fact that they just went from 7 to 16 in a very short period of time. Like, we literally just doubled. Okay. But, SoFi did well. Robinhood did amazing. Nubank did amazing. PayPal did meh, not good. Block was meh. And in turn, you get a diversified portfolio that performs better than the markets. Those fintech names, if you were to just equally spread them out, would have beat the S&P. But individual names in those may have costed you it. I actually think SoFi over the last couple of years would have beat the S&P as well, just because of their most recent large extreme run-up. But if you were to have landed in the PayPal or Block section, it might have been a little bit harder to get the results that you're looking for. What's the ceiling for SoFi stock, you think? What do you mean, today? Or do you mean like for the foreseeable future? I don't think that there's a ceiling on these types of products, right? Like, I don't actually think that the numbers that Palantir is putting up is showing off like how big they can be. One thing that I think allows for such amazing multiple expansion is growth rates that sort of do a V-shaped recovery. So they were going down and down and down in terms of their growth rates. And we can actually bring this up, but it just goes to highlight that financial modeling for these companies is just taking what they're currently doing and expressing it out into the future. And while their revenue was decreasing into the teens level of growth year over year, people said, okay, well, this is probably where they're going to pan out, because turning these companies around into accelerating growth is, unicorn styles of unique. And so that was very hard for people to try to imagine. And so the company ended up going into single digits. But now that it continues to address higher and higher growth rates, and that is seeing no top, people can then expand their mind to go, okay, well, if they can do 36 this quarter, what's stopping them from 45? What's stopping them from doing 50? What's stopping them from doing 66%? And that is on top of the growth rates that they've put on last year. And so whenever you can do that, whenever you can, disconnect from what they're doing today and say, well, they might end up getting into the triple digits if the market is so big for AI, people can put whatever dollar amount that they want on a stock, right? And so for SoFi, I think that like any company, those similar things can also happen, right? If you have some sort of product that allows for student loans to expand very quickly, tech platform to come back very quickly, they have, continuous high double-digit growth in financial services, like the 65% that they're aiming for. The stock can adjust to those level of growth rates extremely quickly, and you would be surprised how high the stock could get. There wouldn't be a whole lot of people saying there's a $8 or $4 price target on the company any longer. AMD is on sale? Yeah, but I'm buying NVIDIA, so oops. Buy the winner. Intel is on a super sale? Well, you're a super brave guy. Let's see here. Any questions here? I just dollar cost average and continue to buy. I think that's a good way for long-term investors to get, a better, deeper position on the companies that you love over time, right? And this is what I really think I liked from SoFi's earnings this quarter, is that they didn't just show the regular member numbers and everything. They showed off the company over multiple years of, hey, everyone is trying to nitpick our individual quarters over time, like each individual one. Look at our compounded annual growth rates over the years that we've been doing this, right? Over 10 plus years of just continuous, grinding, both as a bank and before a bank. And you can nitpick whenever we put out level 1 options or something like this, which, by the way, I have concerns about that as well. But the compounded annual growth rates are just unbelievable for them. And they beat out every single bank. Opportunity cost for holding SoFi is big. I plan to sell. Yes. No, that makes sense after the company had just went up over 100%. Definitely. Tanner, what are your thoughts on Hood? Hood is, it's very funny, right? Like this company, everyone said, well, do you remember what happened to retail? Look what they did with retail, taking away the buy button on GameStop. And those people seem to forget that a lot of financial institutions did that. It wasn't just Robinhood, but, and it was something that they just literally would have a very hard time doing any other answer because they just didn't have the liquidity. How do you, give market makers billions of dollars that you don't have, and then tomorrow it might literally be double what the ask is from today because it was a freaking unstoppable train. So I don't actually think that those problems will re-emerge. A lot of that had to do with Trade Plus 2. It's now Trade Plus 1. I think that's going to go down to Trade Plus 0. So, those capital constraints will end up going down lower and lower. They're a much larger company, more diverse. And, the customers that Robinhood is actually taking on to their platform is a completely different customer than when that even happened. The average account size whenever they were doing that was like something like $1,000, $2,000. And now that's above $10,000 as the new person that's coming onto the platform has over $100,000 in assets under management. Okay. So they went way up market after they offered a retirement product, like way, way, way up market. So, yeah. Luke, I addressed Galileo's revenue. I'm not concerned. I think that this is a systematic problem, not a Galileo problem. This is going to change, but you can't find me a tech platform that is denying the slowdowns here and somehow growing past it. Robinhood over Nvidia. I said it. I mean, this is the great thing about markets. I get to buy both, but I don't know if I. Well, it's hard, right? It depends on the markets that end up coming. Can you find me one post that management has confirmed that it's a macro problem? I think more. It's not a macro problem in terms of as macro as we might think. I think it's more along the lines of like large financial institutions are having a really hard time wanting to switch. Well, one, because of interest rates and their ability to set those, budgets, which management did actually highlight. And you just see it across the board. Like management, no, has not said that. Has every other financial, tech platform ended up showing that there is a slowdown? Yes. And has the CEOs of these companies said this is going to really accelerate? Yes, including SoFi's management. Let's see here. Higher growth potential, new or SoFi? I'm not sure. It's hard to tell. It's hard to tell in terms of growth percentages. Nubank is a very fast grower, but they're going to run into saturation concerns. As SoFi has no saturation concern. They're so far from any sort of saturation concerns, but they are a slower grower. Let's see here. I disagree with Noto shorting EPS to invest. They invested for years and they were taking losses. Now it's time to focus on shareholder return and profitability. Michael, I want to take a venture to bet on the type of person that you are. I'm going to venture to bet that you're older than me, that you probably have twice the age of me. And the reason is that you probably see SoFi as needing a return right now. And in that concern, if you are looking for more, shareholder returns, more profitability in that concern, I think it's honestly just not the stock for you, right? Like, look at the difference between companies that are transitioning into a more mature period and are offering those. But whenever you start to do that, what you are saying is that you don't have opportunities for growth in the future. And so you can now give back a larger percent back to your investors. The companies that do not see any top of their total addressable market or any bits of saturation, like Amazon, for example, this is a massive $2+ trillion business that is still not giving back to shareholders. They are not looking to give back. They're looking for full steam ahead because they're in areas like, cloud growth, which is just unbelievable, right? So I hope SoFi does not give back to shareholders for like another 8 years. Like, this should be full steam ahead, or else I won't if they start to look for dividends or something like this, buybacks can be a strategy that even growth companies can do. So I don't necessarily think that small bits of buybacks, even to fight stock-based compensation, is bad for even a growth company. But if they start to look at dividends, that's most likely a reason to get out. For me, the way that I invest. Not for you, maybe. Do you think any dilution's happening this year for growth? Yeah, potentially. Potentially. It could even highlight why they think that EPS is going to come in at the range that they're going to offer. It could be expectations for stock-based acquisitions. Who knows? Agree, man. Appreciation over dividends. Not only, Joey, do I believe that, it's statistically proven that that is a better long-term investing choice. If you look at dividend ETFs over just S&P or especially growth funds like NASDAQ, for example, or well, growth fund, but indexing the NASDAQ 100 composite, they way outperform dividends, including yield. Okay, so the interesting thing about dividends is that you get your money now at a favorable tax rate, and then you can use that for your own liking. But I do actually believe for the investing style that I want. I'm not saying that this is for everyone. Dividends are an amazing tool for people that need dividends. Okay, but if you're looking for total shareholder return, appreciation has outdone itself. Amazon's return on invested capital is incredible. It's justifying not giving back to shareholders 100%. Okay, but I hope to invest in those companies that are also doing similar things. If SoFi doesn't prove that they can do that, then I'm not going to be continuously holding them either. So not only do I think that their capital should return to reinvestment, but if it is not returning levels that we as shareholders believe is fruitful, pick a different stock. There's a lot of them. There's a lot of companies out there. Jared, I know everyone's touting like it's growing dramatically or something like this. It was missing. Only a handful of months into real investing, so appreciate the info. Joey, love it, man. Everyone's got to start sometime. It's an awesome journey. And a long one. I mean, I have so much more to grow and learn from. I'm sure a lot of you guys have been investing longer than me, and I should be listening to you. But I just happen to have put a little bit too much time into just a few names, which gives me an edge on the tiniest amount of topics. Ask me about the macro, or ask me about different investing strategies, and I'm all ears at that point. I have no reason to talk. But specific industries might be a voice. Do you consider PayPal an unsuccessful investment even though you made money on it? So the answer that I'm going to give you is not the answer for everybody, but yes. So my investing strategy is exclusively, I know this is stupid. Obviously, that there's a difference between making 80% and 100% or 120% on an investment or something like this. But what constitutes successful for me or unsuccessful is whether or not during that time period that I beat the S&P 500. Okay. Also including the allotments for cash as well, because those cash positions could also be in the S&P. But every shareholder should be an index investor and look to hold ETFs if they are underperforming the markets. Some people have to throw in the towel unless it's just simply fun. If you just have a small account and you just like picking meme stocks or something like this, it might as well be going to the casino. There's no faulting that. But do I consider PayPal an unsuccessful investment? Yeah, because over the essentially 18 months or whatever it was, I think I returned I don't know what it was, something like 40% or something like that. Or no, a little bit less than that. It did not outperform the S&P 500 during that time. %, this is a true statement. Okay. The target audience that is using SoFi is not necessarily the target audience that needs to happen. Just because SoFi doesn't offer a product for you doesn't mean that there's not going to be a product for someone out there. Now, there was a little bit of a debate online as I think I might have commented on this. Maybe I can bring this up, but people said, "Oh, you know what? I'm happy there's no level 1 options." Here, let me try to find it. I think it was Let me find it here. I think Ken Megan ended up posting something. So Throwable ended up saying that, SoFi FinTwit was getting a little ugly. And I completely agree that it had been over this little bit. Then GG Capital here said, what's frustrating is a lot of retail does not understand that executives look at projected specific rate of returns. Anyway, he said the loan platform business is a multi-billion-dollar business that we didn't even fully know a year ago. Level 1 options would maybe do 1 million of revenue. Boy, oh boy, do I disagree. Okay. Level 1 options would do a lot more than $1 billion in revenue, or $1 million in revenue just on the actual contract revenue itself. Okay. 2, it's not about level 1 options that get people worried about them not offering that product. It's the fact that data-driven investing took all of his assets off of SoFi Invest to put them into Robinhood so then he could do level 1 options. Okay. So then you're not getting the equity trading. You're not getting the assets under management that might actually end up transitioning back to, spend dollars where he's using a card then. It takes away from the holistic approach, and people are not going to keep their assets on the platform if it's a large part of their investment strategy. So some people look at level 1 options and think, oh, well, it's just a small part of it. But it needs to complete the cycle, or else people are going to take their money off platform. Okay. So that's a really important part about level 1 options. 2, to make your point a little bit better, you greatly exaggerated the loan platform business. It's not on a multi-billion-dollar run rate. Hopefully it is one day. That's not currently where it is today. Both can be growers. And that's the thing too, is I think a lot of people, this is a company, by the way, that in a year ended up putting out SoFi Money, SoFi Relay. They upgraded SoFi Wealth to SoFi Invest. They came out with a credit card. They did all of these products in a very, very short period of time. During COVID, they just turned all the lights on. This is the company that got retail so engaged because they were the fast movers. SoFi was the Robinhood of the COVID period. We moved lightning fast. Okay. After the bank, people said, banks don't work. Banks have to move much slower. They need regulatory approval. This can be a problem for SoFi's growth. SoFi said, no. It can be very fast still. And we hope for that. So people just get a little bit concerned whenever they start to see that potentially like I don't know, there's like double the amount of headcount than Robinhood has, okay, at SoFi. You can work on 2 products at once. That's a possibility. Tanner, is in your opinion, is the AWS of fintech thesis dead? No. So I said this earlier in the episode, but not at all. Skig, thank you so much. Sam Solid was great. He added a lot there. SoFi has been targeting customers with assets in high income. You don't think that those people with the large amount of assets want to potentially write options on those assets? Like TJ is actually getting such a large account right now. He's got 12 something $million, $13 million at Robinhood, that they are stopping him from writing over 250,000 contracts at Robinhood. So then he's looking for other brokerages to potentially diversify his portfolio. And he took a look at SoFi Invest. And whenever he went there, he went, oh, they still don't have it. Okay, I have to turn away. You don't want that. SoFi does not want that. They want to offer every product so then they don't have to turn away users. That's all. And I think that you can just do multiple things at a time. And I don't think as an investor, that's too much to ask for. What does the phrase AWS of fintech mean? AWS stands for Amazon Web Services, which was the tech platform that Amazon ended up creating to be the back end of their own Amazon.com website. Okay, so they host the actual website on the cloud. Okay, and not only do they end up doing that, but they end up offering all the tools to help build those websites and applications all on the background. So that's not just websites, but applications. They do all the AI background now. They do essentially they try to be everything. Funny enough, they actually call it Amazon Bedrock, but they want to just be the infrastructure layer on all internet business. Okay. And what this sort of translates for Nodo is AWS of fintech, meaning if a company wants to get into financial services, this could be anyone from JetBlue to Citigroup to anything. It could be non-financial institutions, financial institutions, anything. If they want to start offering financial products, you come here, you select the product that you want, you get a template of how this is going to break down. All of the back-end coding ends up getting done for you. It's not zero code or anything like this. Obviously, there's going to be engineering teams on both ends, but much easier than going at it from a blank slate. Okay? They connect you with the partners that you may need, and it's a much easier setup. And just from top to bottom, it gets cleared out. Do you think SoFi might be a sit and wait stock? In terms of that, do you mean like that they're going to have slow growth, or do you mean that should you act as a patient long-term investor whenever investing in SoFi? Because you're going to hate my answer, but every stock is a sit and wait stock. At least the ones that I buy. And the ones that don't look like sit and wait stocks, I don't buy. I do have hymns, $100 worth. But, oh my gosh, thank you for the $10 super chat. Thank you. Super sticker. All the weirdest names that YouTube gives out. Thank you so much. Who is the closest competitor? FIS, Fiserv, for what? Are you talking about the AWS of fintech? It depends, because SoFi doesn't really, there's no one that does what SoFi does. So the largest competitor on the core side would probably be Temenos, and they're actually larger. And then on the Galileo card side, it's probably Marqeta. So, but we have sort of a mix of the both. Tanner ended up selling PayPal to buy more hymns, in fact. I hope, Tevis said. Tevis, no, I have not yet. You know, obviously there's lots of volatility in that stock, so potentially in a pullback or something like this, but to be honest, it's not a company that I've even remotely looked into. Phil C., welcome. Thank you so much, brother. Sit and wait equals the stock does nothing while the rest of the market parties. No, I am a huge believer in 2025. A huge believer. No one can tell me anything that 2025 is going to be bad. I don't see it at all. I don't see it at all. It's not like I feel like every year we've been like, oh, you know what? It's gotten delayed. It's gotten delayed. It's gotten delayed. No, I'm excited for Q1. Okay. I'm excited for Q2. I'm excited for Q3. I am not pessimistic on SoFi right now. I don't know when the tech platform is going to start seeing real money here, but I am very excited about the loan platform business, financial services. I'm very bullish for the now right now in SoFi, and that has not been the case for the last 24 months. There's always been something to hate. I like the legal, tailwinds that they end up having, like Trump administration for crypto activity and everything like this. This is all getting cleared up for them. Loan platform business is doing great. Their percentage of fee-based revenue is climbing. Let's see what else. Every CEO is saying that the tech platform industry or fintech in general is coming out of this sort of, weird spot. There is Latin American fintechs that are saying, hey, you know what? We might actually come up north into America if they offer favorable administration for allowing new companies to thrive in America. Who's going to set that up? That's going to be the AWS of fintech. So, yeah, I think people need to have some patience. I also think that people need to have some diversified portfolios, because if you have all your money in one stock, sure, obviously you can watch the Wall Street Bets participants that end up, doing that, and then they hit on those and they absolutely win it. Not only can you find stocks that end up doing poorly, but you find opportunity cost of just being stagnant. You pick at least, like, I think I like going off the Bill Ackman sort of like, there's no real evidence that more than 14 stocks is beneficial. I'm trying to get there. I promise you guys I am. I just trimmed another one, PayPal. I'm trying to get down to a really tight knit group. I just love companies. That's my problem. Like, I just find stocks, I buy stocks. But I don't want one stock. I don't want one stock if it was Nvidia. Okay? There's a thing called high conviction, and then there's a thing called, hey, I don't know that I'm right or wrong. I don't know what I do not know. Okay? So let's diversify away from my ignorance, my arrogance, and put in a couple other segments and other industries. So if I'm wrong, maybe I'm not even wrong on the thesis. Maybe I'm just wrong on the timing. My portfolio still looks like it's performing well if I put it into a couple different places. I don't think that that's something that we should, like, I don't think that that's a problem. I think that that's really good. People are chasing fast money, and you guys end up in worse places because of it. Let's see here. Yeah, the crypto opening up for SoFi, I'm really interested in seeing. Really interested in seeing. Uh, the more partnerships that they get in SMB, I'm really excited about too. Loan platform, obviously really excited for that. Baba, you never put 100% into a stock, specifically if it's founder led. What happens if one of those people end up having a heart attack? You know what's funny? I've always invested heavily into companies that have massive key person risk, meaning that the success of the business is largely predicated on one individual's brain share of that company. And I just have never really been burnt from it. I think the only time I've ever been burnt from it is Shift 4. Shift 4, they said that Jared Isaacman was leaving, and I think the company just recently hit brand new 52-week highs as we get ready for Investor Day. So, yeah, I'm not even burnt there either. We can even see this here. Let's just go through really quickly. This was their all-time high right here, 123.25. And that was a company that I thought that I had big key man risk on. And that happened right here. You can see where he announced his departure. You see this red candlestick? Jared Isaacman said he became the head of NASA. Bang. It was not a good day. Good for him. Bad for the company that he loves, which, by the way, he's not even selling. He said, hey, you know what? My equity investment is still here. Like, I benefit from their success, so I'm not like taking my chips off the table. If he starts taking his chips off the table, whew, that's another problem. Do you see Hood merging with SoFi? No. No, I do not. If there was to be a merger, which is hilarious, this would be a hilarious merger. I actually think there's a closer chance that Coinbase and Robinhood end up merging than SoFi and Robinhood. From what I know about those two businesses, they have unbelievably high mutual respect for each other. Okay. And I could see that happening. But yeah, I mean, by the way, I don't even think that's going to happen. I do not think that's going to happen. But I see that as a at least a potential. I don't actually see SoFi and Robinhood merging like at all. Bezos is still very involved with Amazon. Scott, you got it exactly. I think that Jared Isaacman will be very involved with Shift4. Tanner, Seeking Alpha and Tip Ranks increased the forecast EPS estimates for Hood a lot. Now it almost seems like they might miss earnings. What do you think of this? So it's not that those companies, so by the way, it's not that those companies are giving forecasts for those businesses, by the way. It's just a conglomeration or an average across all Wall Street's public estimates. But let's go ahead and take a look because I have my own estimates for these businesses. Bear with me. Also, to course members, by the way, the reason why I'm so late, we're not doing a course member live stream tonight. We're going to do it tomorrow. I'm going to be doing a breakdown or a deep dive video. I'm not going to tell you guys what the stock is, but I'm very excited. It's definitely a company I'm sure you guys are aware that I'm looking into a lot. I'm looking into a lot. For anyone that wants access to the future or the course member live streams, you can go to futureinvesting.pro, that right there, to get the growth investing course. That's where you can get lifetime access to weekly deep dives on different stocks, my entire portfolio, all my trades that happen with essentially within the exact same minute that I'm making them. HIMS, Joby. Yeah, honestly, maybe I'll do one on HIMS to do a breakdown. That won't be tomorrow, but it was actually supposed to be tonight, but I wanted a little bit more time just to get you guys a little bit more information. I was working a lot today on it, though. Like a lot. Man, I'm so happy I've made a career change. I'm just doing this full time because I just get to like research. It's just exactly what I would be doing if I wasn't doing YouTube. So the fact that I can just sort of share my ideas is a freaking unbelievable opportunity for me. And I love this community so freaking much that we're able to just come together, talk about stocks. I learn a lot from you guys. This is why there's a lot of names that end up coming up a lot. It's because, I see people like Paul, for example, who's in the chat, and I just think his ideas are great. And I listen to Paul, and whenever I see Paul's comments in the chat, I read every single one because, I like the way he plays companies. I see a couple people in here that live very, or that do a lot of things that I very much align with. Yeah. Little love to Paul Gardner there. Willy Wonka, I love you, man. Thank you so much for supporting the channel a ton. Toto, SoFi to 0. The resident joker in the audience. Crowdsourcing is seriously a great benefit. And the only problem, like, this is why I think that the Discord is really good, is because a lot of the audience gets to communicate even past, doing or like conversate even past just the live streams. Because I hate that, like, I decide whenever you guys don't get to talk to each other anymore. Like, that's absolute bullshit. So, like, the Discord just allows for 24/7 communication. You guys can add each other like friends. I wish YouTube did that. I wish there was more of a community thing. They're trying to roll it out. They gave me beta access. It's complete garbage, YouTube. Honestly, here I am. I'm buying freaking Google stock and everything, and it's just not working. or like they're not making the products that I want on YouTube. Tanner, beer soon? Text me. I'm not drinking this year, Tevis, but yeah, I'll come to the city. I'd love to, brother. But like, pick a different drink. I mean, you can have drinks. I'm not offended or anything. I'm just not drinking. Sorry, my bad. I really am trying not to curse, but sometimes there's just not words I can find that express how excited or lucky or fun that I'm having. Raptors games next Wednesday. Let's see. What's Wednesday? Yeah, probably. I could do that. Or let's say we're not. Actually, I can't do that. Text me. I don't want you know what? All right, I'll go. But I don't want to bunch. Like, there's 500 people in the chat right now. If there's like a SoFi section. Damn, man. That's hilarious. That's hilarious. Okay. Whoever is dude, you have no idea what you're going to be doing here. So whoever is a SoFi investor, go to that game, DM me, and I'll buy you a beer. You're going to be buying like 20 beers, dude. Like, I've gone to like those Robinhood investor days. Okay, the amount of people, the retail audience there that has seen our videos is crazy. Like, are you seeing the events that Amit's putting on? Like, people do show up. They do. Okay. Okay, now you're making me seem like I just wouldn't want to just pay for 20 beers. Whenever you put it that way, it's like, okay, that's not a big deal. But like, yeah. Yeah, I'm definitely a little cheap. You guys could buy your own beers. 20 whole beers. That is that's a clippable moment. Holy shit. Okay, let's see here. Yeah, they are like $15 beers. Tanner the Tiny. No, I'll cover my own bill. I'm not cheap. I'm not cheap that way. I'm just, I'm not just buying people beers because they show up. And Tevis, whenever we went out for dinner, I think I actually got dinner, by the way. Because it wasn't, I think you were there, but it was me and my girlfriend. So it was a little bit like, anyway, I'm not talking about whether I'm cheap or not. He says false. What are you talking about false? You didn't pay for me. No, bro. No, that is not true. No, you did not. No, you did not. When was that? I'll pull up the freaking receipts. You absolutely did not pay for me. No, no, no. That's not true. No more laughing. That's not what happened. Yes, I do want to bet. I do want to bet. Tevis did not pay. Nope. Remember when it happened? And I'll go back. I'll literally find the exact place. You probably know what the restaurant was. I don't remember what it was called, but I remember where it was. Nice place, though. We're going to the tape. Let's review the tapes. Yeah, the waiter just brought us full table bills. Just multiple of them. I'll literally find that. Okay. All right. I'll check that. I'll check that. That's called a dine and dash. I have back buttons on my mouse and just accidentally clicked it. I'm back. that, that literally was a dine and dash right there. No, dude, I will pull it up. I'm not doing it. Do you want me to do it right now? I can do it right now. Might take me a bit. But if you're saying you have the exact day, I'll find it. People want it right now. Okay. Hold on. Hold on. I'm going to my statements right now. Give me a sec. View statement activity. Let's go. Okay. How do I... oh, sorry. Previous billing. What did he say? June... June of 2025 or something like that? Or June of 2023? June. Okay. So this is a true statement. I'm sorry to say this. I don't know if there's anything on my screen that that could potentially expose me here. Maybe I'll just share my screen. I don't think there's anything. But I've ordered the report and they say that it's going to take a bit. But I've ordered the Amex report. It should be here in 24 hours. So unfortunately, I cannot check it right now, but because it's an archived purchase. That's Amex's site. I don't know. That's not a Canadian. That's American Express. That's American Express. Amex, not SoFi. No, I'm a Canadian. The lie. It's a freaking website. Look, I'm on the site. I can't. What do you want me to do? Yeah, it's just too old of a statement. Nothing on me. All right. Ladies and gentlemen, this has been a fun time. Thank you all so much for watching. Really do appreciate it. It's American Express, not Looney Express. Yeah, they do actually have Canadian dollars, though. Thank you all so much for watching. Really do appreciate your time. If you guys want to support the channel, hit subscribe. Bye for now.